Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, Monday we completed the month of August, and once again we had a very robust returns on the month. We closed very near the RXT number, which is the extreme projection on the market grid. We did not print the 3520, but we did manage to get the 3515. And I'll go through a lot of details on the technicals tonight on how the pivot numbers and some other elements that are setting up that are becoming important to the next several sessions. The big action yesterday, of course, was in Tesla and Apple. Tesla up 12% after the split, and we saw Apple go up about 3.5%. The question is, how far will these stocks run, and will this split actually end up being some sort of intermediate top? I don't believe we're at an intermediate top. I do expect to see the markets remain stable. Overnight, we've seen futures trade down to 3484 level. We bounced back above 3500, and we're starting to stabilize up here, not too far from the highs. So there's not any material things going on with the markets that look like we're starting to form a top here yet. And I know a lot of folks are starting to talk about that, and you're going to talk about that as you go into new highs. That's going to be a conversation you're going to hear. As I go through the metrics tonight, you'll see there's still some strong underlying trends that are driving this market and certainly going to support them. One of the things I haven't discussed for several sessions now is the leadership change. And we saw a lot of weakness in a number of the indexes. I'll go through that in the beginning of the technical section tonight, just to bring back some perspective of what's really happening. When you look at the numbers on a day-to-day basis, many times it feels worse than it is. From a fundamental standpoint today, we're going to see a couple manufacturing numbers come in today. I don't expect any surprises there. They're both expected to be in expansion mode. We're also going to see construction spending come out today. It's expected to show a 1.2% increase. That number could come in a bit better than expected. But from my viewpoint, as we go through this week, today's likely to be a pivot day as there's some news coming out, but nobody's going to be making any big moves ahead of the ADP report and Thursday's claims and ultimately the employment numbers on Friday. And as I mentioned in last night's video, remember, this is a long weekend coming, so there's going to be a lot of considerations on positions for people, especially as we start the month of September, as a lot of folks are going to be positioning their portfolios, especially in the institutional realm and mutual funds and some of the ETF rebalancing that we're likely to see as we begin the new month. In yesterday's action, some of the selling that we did see, most likely was some slight rebalancing at the end of the month, but there was nothing material there even to look at. Today's action goes, I don't see anything material to push the market big in either way. Expect to see a moderate range today. Let's go ahead and take a look at the charts and see what they're telling us for Tuesday. As we review the WaveTech database, over the past several sessions, I've been discussing about the liquidation that's likely to occur in the daily database. Now, we saw a minor downtick yesterday in the S&P, but we saw about 1,200 sell signals, about 160 buys. So a huge negative rotation on the short-term database. We also have dropped below the 60% range. We're at 56.31. I continue to expect to see this implode even further over the next 4 to 6 sessions. Now, my hope is that we get to at least 40%, and I would love to see a 20% range where we just see this grind out and a lot of these short-term trades start to recycle. This is a very healthy event that's happening on the short-term models, and it reflects some of the rotation that's going on the short-term level, but it's also reflecting what's going on in the intermediate database as we continue to move up to a 70% bullish on the intermediate. One of the things I wanted to review with you, the short-term models that are in here. This portfolio has 5 ETFs, and the active symbols in this are EEM, EFA, and then we have IJR, the small cap, the mid cap, MDY, and SPY in here, and they're all trading on a daily model, and this has done quite well this year, and this has been one of the key models to continue to watch. We look at the open positions. It currently owns all of them, but we are seeing a lack of follow through in EFA, and IJR has started to roll just a little bit. We have 3 orders for tomorrow's opening. We're selling the emerging markets. We're selling EFA, which is Europe Asia Index, and then we're selling the small cap. We're taking profits on the small cap index. We're taking a small loss in the EFA and EEM. We're taking a huge gain as it was up 21%. The reason why I'm covering this is exactly how these portfolios work. It's important when you're using the WaveTech Virtual Portfolio Manager. As we look at this, what you're going to see here is that right now it's basically 100% invested, but tomorrow morning after the open, it's going to move to 38%, 60% in cash on the open in the morning. And what this is going to do is going to neutralize the equity curve at an all-time new high. And so you're going to see some protection being taken on, and this is part of this rotation that I've talked about in the database. This illustrates what's going on a short-term basis. Also, it's showing how the portfolio process, here we are at an all-time high in equity, and we're taking protection here and locking in some profits. And this should rotate out along the lines of what I've talked to you about in the database and see a 4 to 6 week rotation, and these symbols are likely to come back in. And just why I'm talking about this, remember we have the WaveTech training. Even if you're not using the software, it's the beginning of the month. Come and join us. It's at 4:30 Eastern Time. It'll be on the channel in a live stream. So join us for that tomorrow. As we begin the technical section, as I mentioned in the opening comments, I want to review the spread on the small cap versus the NASDAQ. You'll notice we have basically support line down here. We have this broad range that we've been operating in. And we're also getting a divergence here from the standpoint we're not seeing an acceleration on the downside. So this spread is potentially will start to turn up again. That's what I'm going to be watching very closely. This is what I talked about. Sometimes when you look at the numbers on a day-to-day basis, it feels worse than it really is. Now it has traded back down to the low end of the spread. The last time we saw anything like this was up here at the top, and then it broke down. But at the level the spread is at, it's not likely there's a whole nother leg down in this spread. This is most likely this broad trading range with a larger volatility, which is typical when you're setting up a major low. But I'm looking for some sort of turnaround and some kind of direction here as far as the markets go. And I've talked a lot about this over the past several weeks. For the markets to continue a rally on an intermediate level, where there is going to need to be a rotation. It doesn't need to happen immediately. It doesn't have to get into this big outperforming cycle here. It does need to maintain some relative stability here and start to see some overperformance over that next 4 to 6 weeks. I think once all the database rotates and as we wash out the market a bit and some of the internal overbought situations and extended trades that we have in our database wash out, then we're going to start to see some positive rotation on a secondary level. Now we have seen, depending on the set of stocks, some of these small caps have absolutely screamed. So the large indexes, just like everything else, they're cap weighted. What dominates these index is the largest capitalized stocks within that small cap area. So it's weighted as well. There's a lot of stocks that are rotating in a positive configuration, but it may not be the ones that are driving the index right now. But there's a lot of opportunity out there in the small caps that are starting to emerge. As we review yesterday's action, we did trade up to 3514.77. As I mentioned in the opening comments, the extreme projection for the month was 3520, so we basically printed at the top end of the expectations for last month. In last night's video, I talked about possibly having an R2 high, an S1 R2. Well, we ended up having an R1 S2 range. The low was 34.93, S2 is 34.92.20, and the high was 35.14.77 with R1 35.15.48. So as we look at today's potential range, we're seeing a bit of a contraction in volatility, but we're also seeing that there's some limitations on the upside. Now, the futures are trading near the high of the session. It suggests that we could open against this R1 number, and if we get above that, then you're going to see a retest of yesterday's high, and then R3 and RXT are possible. But as I mentioned in the opening comments, I basically expect to see somewhat of a neutral day. It's before the ADP reports coming out. There's nothing really material, and I'm not sure we're going to see any big volatility. On the downside, what we're likely to see is a potential R1 S2 number that would be 34.87. The futures have already printed down there tonight. As the markets unfold tomorrow, watch that S1 number 34.94, and then the next level 32.87. I don't see the market getting below that level. Now, as far as moving average support and other things go here, there's not a lot to play on from that standpoint. What we're going to be dependent on is these relationship numbers that I'm showing you here on the grid. We do have ppm1 at 0.35, we have ppm2 at 0.32, and ppm3 at 0.24. Anything over 0.25 is a bullish pattern, and I've talked about this a lot in the past, but we are in this maintenance mode of this trend. This upward slope is going to continue. There's very low risk to any major turnaround, and the worst case would be a move down to around the 34.40 level, and that's not likely to happen today. We could see some risk come into the markets, but it doesn't appear that's going to happen today. As I've mentioned several times during this video, is I don't see any big moves coming ahead of all the employment stats that are coming out starting on Wednesday's ADP all the way into Friday's number, but everybody's going to be, I think, on hold. The other chart I want to review, as I mentioned in last night's video, we're going to talk about the new monthly market grid numbers that came out, and these are significant. In the pop-up right now is last month's. You can see there's the 35.20, the high was 35.14. I try to set this up every month where I think the expectations are going to be. In the beginning of August, when I discussed these numbers, I thought we might see 33.95 to 34.61. Well, it exploded well beyond that number. As we look at this month's number, we continue to have some numbers clustering around this 35.50 number. And 35.53.53 is R1. R2 is 36.13. And then you see 36.13 to 36.72, R2, R3 for the month of September. And then RXD is 37.25. These are some crazy numbers on the upside, but there is still a lot of momentum. As we look at the ppm1, it's at a plus 1.52. These are monthly numbers, a plus 1.20. And we're looking at ppm3 at a plus 1. This is some of the most robust numbers that we've seen for multiple years as far as the ppms go. The big momentum was way back in 2009, and I've talked a lot about this before. You get this big surge in momentum. Well, this entire rally that we've seen for 10 years was all set up off of the '09, and you can talk about QE 1, 2, 3, 4, whatever you want to call it. That definitely was pushing the market up. And after 2018, you also notice that the market grid numbers, the volatility is starting to expand. We saw some expansion around 2015 and 2016, but now we've seen this huge expansion of volatility. And now we're seeing this massive contraction of the volatility since the March lows. The configuration on the market grid suggests that we're most likely going to see an R2, R3 number this month in September. And the extreme is going to be that 34.47. That correlates with the number I was talking about as far as the daily, and there's some weekly numbers around this point. Next market we'll cover are the NASDAQ Futures. We're trading 12,167. We'll look at the market grid for tonight. We got R2 at 12,195. We're not quite there yet. We're above R1 at 12,152. S1, 12,075. The low has been 12,093. So we came close to that earlier when we had some weakness. And now we've rebounded and we're moving up toward this R2 number. My expectation is we will at least move the R2. And if I'm right about this quiet session today, or at least a muted volatility session, then we should see worst case S1, R2 today. I don't believe we'll get down to an S2 number on the NASDAQ. So expect that S1, R2 will probably be the range for today. Reviewing the monthly market grid for the NASDAQ Futures, looking at R1, 12,368, and then R2, 12,652, but the extreme this month, 13,190. You know, this thing is in a vertical move. We have PPMs a plus 3.99, plus 3.27, and a 2.02. These are numbers that tell us that the probabilities of a major reversal decline is just about nil. That doesn't mean there's not downside. You can move down into 11,000 handle. You can see here on a monthly S2, 11,859, 11,575. But as far as a major reversal turnaround, at least this month, not very likely. The final market I'll cover tonight is gold. And what we're seeing here in gold was interesting. We got that reversal pattern that happened on Friday. In yesterday's action, we continue to see some follow through. The low was very close to that 1959 number that I talked about. We did trade as high as 1985. We closed at 1978. It was actually a decent close. We're seeing follow through overnight now, and we're seeing trading all the way up to the 1997 level. And I discussed in yesterday's video, 2004 is a key resistance number on the weekly charts. And it looks like we want to trade up toward the upper end of this grid. So we're above R1. R2 for today is 2003, and then extreme 2017. We take a look at the weekly chart. There's R1 2004. I discussed this in yesterday's video. This is probably going to be the higher end of this range. And then 1945 will be the lower end of the range. And this is likely to be at least this week's range, 1945 to 2004. We may not even be able to print much below that 1960 number. So this market could tighten up as far as daily volatility goes. Taking a quick glimpse at the monthly grid, since this is a new grid for September, we're looking at the R1 2023, so that's just a touch above the numbers I just talked about. S1 1934. I think we could see higher numbers. We could see the 2072 level. I'm not sure we're going to be able to print a new high in this particular sequence, but the PPMs are now expanding again. You see PPM 1 is now 277 and it's upticking, and the overall momentum in this market is very strong, and these underlying trends will remain intact. So certainly there's not going to be any major declines in gold prices. As I mentioned a minute ago, probably S1 is the most likely low for this pattern, and R2 is probably the high as far as this month goes. We'll see what type of numbers and what kind of events happen as this month unfolds. This is the first day of the month. But those are the expectations for the month and how we're likely to trade. This will complete the video. Remember, we have the WaveTech training tomorrow, 4:30 New York time. Thanks again for watching. We'll talk to you tomorrow night.